proud, ladies and gentlemen, to officially open the UnConvention. I have the privilege of introducing my good friend, Bill Shireman. Bill is somebody who, if a protester lands on your roof or shows up at your front door, Bill's the guy you want to have on speed dial. Bill has helped to usher in a wave of more collaborative discussions between advocacy organizations and corporations working to solve problems, and as Secretary Schultz said, not create them. Bill and his organization at Future 500 have been seminal not only to the creation of the UnConvention, but to creating this entire idea of seeking out common ground and finding ways that we can solve our problems together. Ladies and gentlemen, the CEO of Future 500, Mr. Bill Shireman.
Thank you very much, Richard. Really appreciate it. It was an honor for me to sit with Secretary Schultz for that discussion, somebody who has inspired me since my childhood, and we have a number of folks that are going to speak who are in that position. Others who inspire me, though, are the people that I work with at Future 500 who have been so proud to work with Sierra Magazine to bring the UnConvention portion of the Commit Forum to you this year. We all know why we need an UnConvention. America's two great political parties are in the midst of an angry divorce. And we know that every second November or so, each one of the parties thinks that they're about to get full custody of the nation. We're about to reach another point in November where we will make a decision about that. But once again, the result will not be a clear one. Both parties, the Republican and the Democrat, have a strong political base. In fact, both of them have two bases. They have a power base and they have a purpose base. And we know that the purpose bases in the two parties are very, very different from one another. They have fundamental differences. That one of those bases reveres free markets. The other base reveres free-flowing economies. One of those bases fears most big government. The other base fears most big corporations. One of those bases, left to its own devices, might spend us into oblivion. The other base, left to its own devices, might drill us into ecological oblivion and national security oblivion. But there's another base that the parties have, the power base. And the power base is different from the purpose base in that it's kind of the same base. It's kind of us. Not us as individuals, but all of the institutional versions of us. There are us as business leaders. It is us as employees. It is us when we're unemployed. It is us when we're students. It is us when we're citizens. It's us when we need Social Security, when we need health care. All of these us's have a certain amount of power over the political system and sometimes make it difficult for all of us to work together. If it were just a matter for us to resolve the problems between the two core bases, the base that tends to prefer government, the base that tends to prefer business, this would not be a difficult challenge. But when you add the rest of us, it becomes a challenge. So in the UnConvention, we're going to have 4 very interesting discussions for you. The first one is going to be about crony capitalism, the process by which big companies tend to lead to big government, tends to lead to big companies, tends to lead to big government, and tends to integrate those interests. Not because of a conspiracy from George Soros or the Koch brothers, but simply because of us, because we represent our interests, our institutional interests in ways that bind those two together, sometimes in more of a backward-looking way than a forward-looking way. Tomorrow we're going to have a really interesting discussion about the dual deficits, the economic deficit and the social and environmental deficit, and how those two draw on one another. It's not a conspiracy of the capitalists or of the socialists. Again, it's us. We have battles over who is going to be subsidized more, them or us. That will also be a topic in our third session on energy security. The battles that we have that have led us to let $7 trillion in economic value slip away from the United States in the last generation because we can't figure out who to subsidize more, them or us. And then finally, we have a session on digital freedom and the capacity of a new family of technologies to bring us the high levels of prosperity in a sustainable way, if only we can overcome opposition from us. We are not going to let these discussions just end with this conference. We are going to take the discussions that all of you have and that all of our speakers have, and we are going to collect them together and deliver them to the next administration, no matter who wins this November, because we know neither party is going to gain full custody of the nation. Some of you have seen this book rolling around. It contains some of the ideas of the speakers that you'll be hearing from in the UnConvention portions of the Commit Conference. We would love to have your feedback on that, your additions to that. Talk to any of the Future 500 folks or the folks at the front door to get that information and to stay in touch with us. I am pleased now to introduce you to the next speaker and to an extraordinary group of folks who will have a living room conversation about the topic of crony capitalism. David Stockman is, as most of you know, most famous for having been President Reagan's budget director. He also was an aide to one of my favorite early Republican congressmen, John Anderson, who ran for president in 1980. He was a congressman himself before joining the Reagan administration. He produced some of the largest tax cuts in the history of the nation, but he himself wrote a book later saying that he didn't finish the second half of the Reagan Revolution, and he's still working to do so. He left politics, joined Salomon Brothers, joined the Blackstone Group, took what else a contrarian investment strategy to the benefit of his clients, and put himself in a position where he now has the capacity to tell us the unvarnished truth. So I am very, very pleased to invite and welcome David Stockman.
Well, thank you very much, Bill. I have a very big topic here. Obviously, crony capitalism is an immense thing in terms of trying to understand where it came from, why I think it's really sapping the vitals of both our democratic process and our free enterprise economy, where it might be going, and what might be done about it. But I noticed in the poll that we've already taken, 62% of you already think it's a huge problem, and only 17% don't. And so therefore, I'm a little bit dismayed because I'm writing a book on crony capitalism. I'm up to 600 pages already, and I'm wondering whether I really have to convince anybody or not. So what I think I might try to do this afternoon is make a few reflections on the big picture, the framework, where it comes from, why I think it's a huge, serious problem, but then table some pretty radical and hopefully thought-provoking ideas on sweeping change that we need if we're going to both recover a free enterprise economy that works for people and jobs and prosperity and the future and hope and so forth, and recover a democratic process that is not totally dominated by interest groups and money and PACs and K Street and lobbying and so forth. Now, where did it come from? I think everybody has a different answer. Some partisans think Obama brought it, others think Bush brought it, some think it started in the Reagan era with deregulation, but I think crony capitalism really got implanted in the United States with the abomination of August 1971, when Nixon came back from Camp David and announced the four evils, that he was defaulting on our obligations under Bretton Woods to pay off our international balances and closing the gold window, and thereby putting us on a course of essentially fiat floating money that has now led to the crazy situation that we're in today that I will talk about. Second, he put on wage price, interest, and profit controls on the entire economy, saying when the election's at stake, maybe free enterprise is not so important after all. He put a 10% import surcharge on everything and got in a huge nationalistic conflict with most of our allies in the rest of the world. And so, therefore, it started a process that, and then he had the bad grace, I guess I would say, to pronounce at the end, we're all Keynesians now. And what that really meant was that the government will become omnipresent in our economy through the fisc, through the monetary process, through various kinds of direct intervention like it's never been before. And lo and behold, here we are 40 years later, and I think Nixon couldn't have imagined where all this would lead, but I would say that it's led to what I call uber Keynesianism, which means that almost every one of the ideologies that motivate the debate today, the political process, are more or less a variation of the whole Keynesian proposition that the government has to manage the process of a free enterprise economy. I think when push comes to shove, the supply-siders are just Keynesians of the prosperous classes. I think we have in the Democratic Party the core of the old-fashioned kind of Keynesianism. I think monetarists, at the end of the day, who are trying to run the economy through the monetary dials rather than the fiscal dials, are ultimately Keynesian. And then most of what passes for just plain politicians in Washington, or one way or another, buy into the proposition. And I think the common notion is that what we're dealing with and why the government has become so energized, so active, so omnipresent, so involved in everything, which is really what leads to crony capitalism. But the common notion is that the free market is so inherently weak, unstable, pratfall-prone, suboptimal in terms of the results it produces, whether it's jobs or income or GDP growth, that it must continuously be nursed, medicated, stimulated, propped up, managed, manipulated, massaged, even marinated, I guess, might help. And so therefore, when you have that as a fundamental proposition, there is embedded kind of a huge notion that there is a great market imperfection built into the free market, into capitalism, that has to be compensated and corrected by the state. Now, my argument, and then we can get into some solutions, because it goes in many directions and we wouldn't possibly have time to go through all of it, but my argument is that that proposition is upside down. The real imperfection is not in the free market, is not in unadulterated capitalism. The real imperfection is in the process of government. It's in the machinery of the state. It's in the programs and agencies that get created in order to allegedly deal with this fundamental flaw and imperfection that allegedly exists in the private market. And I would suggest the reason for that counter proposition is that when you really think about it, at the end of the day, government action, government agencies, government programs always and everywhere get captured by special interests who have much at stake in terms of the outcome and therefore have rational incentives to mobilize political action committees, election resources, K Street lobbying capabilities, and on, because it's an asymmetrical proposition. They get a payoff that's extracted from the rest of the consumers and taxpayers who are going about their daily life, sleeping through the political process, as it were, and the payoff, on the other hand, of getting a defense contract or getting an ethanol subsidy or getting an auto bailout or getting really some of the hugely unnecessary education loans and grants that are propping up the higher education complex in America today. All of that is an inherent outcome of an overly politicized, overly mobilized process that says nothing can be expected out of the private enterprise system unless it is constantly managed, as I say, manipulated, massaged, and intervened. And so now, as time goes on, as that idea, so what I'm saying is that the problem we have with crony capitalism is the bad idea that's embedded in supply side and in monetarism and in Keynesianism. They're all the same thing. And as that bad idea has spread and become rooted in our process and in our way of thinking and in our policy ideas and arrangements, then it has only spawned the machinery that becomes self-perpetuating and makes the thing even harder to deal with, more monstrous in the way that it's embedded. So therefore, K Street, which was kind of a sleepy place when I first went to Capitol Hill in 1970, or even when I was elected in 1978, today K Street is this massive machinery of influence peddling that thoroughly dominates, infects, corrupts, if you will, our entire governance process. So we have the problem today of citizens united, and it's not simply too much money or vast money or billions or the Koch brothers or George Soros, as Bill said, in the process. It's that all of this money funds an industry which is called the industry of permanent political mobilization and electioneering, which as a result reduces everything in the governance process to talking points, reduces everything to partisanship, reduces everything to maneuvering, and as a result, the collective intelligence of our society is falling because we have adopted an idea that has bred a process that has led to the paralysis and the capture of all the machinery through the crony capitalism that I'm describing. Now, there are three routes to get there. I'll hit these quickly and then go through some big solutions that at least should be controversial and certainly will not be accepted by everybody. There are three routes to the Keynesian, uber-Keynesian dominance of our system, to the saturation of our system with politics and special interest and maneuvering that gets captured by the privileged few rather than the harmed and imperiled many. One of them is the Federal Reserve monetarist current policy, which has gone so far off the deep end in money printing and low interest rates and monetization of the debt and constant intervention in every aspect of the capital markets, so that today there really isn't any financial system left. There's no free market in finance, whether it's on Wall Street or banking or anywhere within the financial system, equities or bonds or derivatives or commodities. It is all driven, and the cadence really goes to the last word, the last maneuver, the last utterance that comes out of the Fed. There is no one at home today on Wall Street. There's just a bunch of computers trading word clouds that are emitted by the central bank and cause everybody to scramble for a few hours or a few seconds or a few days from one kind of trade to another. And the reason for this is the idea that our economy is falling apart. It's so weak that we have to have the Fed totally involved deeply in the whole process, day and night, implementing things that, if you think about it, are absolutely lunatic. You cannot buy half of all the debt, or 70%, issued by the government month in, year out, and expect that it's going to lead to a good place. Because if that's true, why are we working? Why are we saving? Why don't we just have the Fed print 10 trillion and drop it out of helicopters and spend 1 hour a day picking it up, and then we can all have a leisurely life the rest of the day? This whole thing can't work. They're painting themselves into a corner. I mean, the idea that you could have zero interest rates for 6 years is so radical that in 1990, if you had brought that up at a monetary conference, you would have been run out of the meeting on the grounds that you were incompetent and had no idea that in the course of human history, people have tried that a few times and it's never worked. Now, I don't want to, my purpose today is not some grand critique of Bernanke, and I certainly would love to do that, and I don't want to get started on that. But here's the point. This is why it's crony capitalism. Because the Fed has been taken over by Wall Street. The Fed is basically in the service of the huge trading operations, the hedge funds, the big banks, the J.P. Morgans, the Goldmans. In fact, most of the central banks around the world are run by Goldman, and they're run for the interests of the speculators who are involved in markets that aren't honest, that aren't real, that are totally controlled by the Federal Reserve. And so, as a result of that, you get the same asymmetry that you might think about when you think of ethanol subsidies helping the corn farmers and everybody else is paying the cost. Okay, so what do you get? Number one, you get the savers of America, and there are tens of millions of them who are being crushed because Bernanke has said that the short rate, that is the safe place to put your money, a CD is going to earn you the grand sum of 40 basis points, and that's all you deserve. And even if you saved $1 million, you're going to make $10,000 a year after spending a lifetime saving $1 million. That's what you get. You get a situation where the asymmetry causes retirees to be so positioned in such a corner that they literally are being forced to buy junk bonds or the Russell 2000 or some other speculative security, because that's the only way they can make even a modest amount of income out of their savings in order to deal with the cost of living. It means that the middle class is being punished through an inflationary process in commodities, food and energy, that we know has happened, and that is considered by the people who are running the Fed and all the Wall Street people who love it to be just an unfortunate side consequence. Now, on the other hand, you can see where the cost is being spread widely over innocent bystanders. There are a lot of people who are doing just fine. Do you know the carry trade is the unbelievable money minting machine, the most unbelievable money minting machine that's ever been invented? Because what the Fed is telling you, and let me just say, I was there in the early 1980s when Volcker was running the place, and every morning when the bond traders and the stock speculators got up, they had no confidence about what Volcker was going to do. They were on their toes, and they weren't taking speculative risk, because if he felt it was necessary to drive up the interest rate by 300 or 400 basis points in order to bring the economy under control, that's what he did. The Wall Street traders be damned. But today, Bernanke says, I can pledge to you that if you're in the carry trade, that is, you buy $1 billion worth of 10-year bonds yielding 1.7%, and then you go borrow $950 million to fund them, so you only have $50,000 at risk. I will guarantee you that your $950 million of overnight debt that you're funding your position with will cost you nothing. 10 basis points from now to 215. I'm not going to surprise you. I'm not going to Volckerize you. You're not going to wake up some morning and find that the overnight rate is soared and your carry trade is in bad shape. No, I am going to guarantee you that as long as you want to keep on that simple trade of collecting 1.7 basis points on $1 billion and paying 10 basis points on $950 million, back up the truck, load it up, and keep doing it over and over. That's what comes in terms of what the cronies are getting out of this arrangement. It means that everybody is front-running the Fed. It was leaked for weeks in this latest QE3 that they were going to buy MBS, mortgage-backed securities, Fannie Mae and Freddie Mac. And so the smart money was buying all those things, knowing that as soon as it was leaked or announced, the price of those maturities, 5 years, 6 years, 8-year Fannie Mae's would go up, and they would harvest a windfall simply because they were able to front-run what the Fed was doing. And the same is true with the leveraged speculators that basically inflates asset prices, and you get the debt for free. It drains speculative earnings and windfalls to the top 1%. That's why we have the distribution problem in this country, this so-called income distribution problem. It's not because of the inherent nature of free markets and capitalism. It's due to the fact that we've created a massive casino run and presided over by the Fed that basically is making it easy for financial speculators to capture huge windfalls while everyone else pays the price of an economy that's failing, of savings that produce nothing, of a cost of living that's going up, and so forth. So my point is that our whole economy now is stuck under the management brief of the Fed, and we're now afraid to let go. Why are they continuing to say QE3, QE4? Why? I mean, they're now going to be buying $80 billion a month of MBS, mortgage-backed securities, when only about $150 billion are even issued. Why are they doing that? And the answer is they're afraid that if they stop, if they announce we're going to let the economy now sink or swim on its own, we're going to allow the free market, if you could imagine that, allow the free market to set the interest rate for once, that the boys and girls on Wall Street would have a hissy fit. They would go nuts. There would be a panic. There would be a massive sell-off. The stock market would drop by $1,000. They have taken themselves hostage. The whole system is caught up in a big crony mess. Now, that's the monetary side, so that's monetarist uber Keynesianism. The Republicans have done the same thing on the tax side. You know, there was once upon a time when I first started in 1970 where Republicans thought the tax code was a way of raising revenue, as unpalatable as it might seem, in order to pay the bills of government, and therefore you ought to raise it in the most efficient, the least economically damaging and disruptive way as possible. But after the 1980s, the Republicans got onto the idea that the economy is so inherently fragile and vulnerable that let's have a tax cut anytime, anywhere, for any reason that any K Street lobbyist can think of and call it a jobs program. And so as a result of that, we've dismantled, the Republicans have, the whole tax code, and we're collecting 15% of GDP today, lower than Harry Truman was collecting in 1948 before we even had a Cold War that was started. And I don't know why we have the defense machinery today, but we do. And so my point is we're spending 24% of GDP, and we have a whole set of ideas, the Republican prosperity ideas, the supply side tax stimulus idea, which is really just, as I say, Keynesianism for the prosperous classes. And so we end up with K Street owning lock, stock, and barrel the tax code. So we end up with stupid things like we just had 100% first-year depreciation. Okay, that was to stimulate the economy because we're told without the stimulus we would have gone down a black hole. Do you know what all of the rich guys were doing with their 100% first-year depreciation? They were buying themselves a new G5. That's what they were doing because they could write the whole thing off in 1 year. Now, I don't want to just pick on that example because it doesn't make sense anywhere. If you're going to have a corporate tax code, and I don't even believe in the corporate income tax, but if you're going to have it, you can't have depreciation 100% in 1 year, or what's the point of the whole thing? Or why do we have the ethanol subsidies? 1/3 of the acreage that's parching out there in America is today being turned into fuel and burnt in tanks. Ridiculous. Why do we have all of these energy alternative energy credits that lead us to the, nonsense of Solyndra and all the rest of it? Because it's the same idea. Let's have an incentive. Let's use the tax code to make the economy go. Why are we giving $6,000 tax credits to the GM Volt that no one wants to buy and so forth? So my point is A second domain of crony capitalism is that our tax code has been taken over by the Keynesian supply-side idea that the economy must be constantly medicated with stimulus and spending tax cuts and so forth. And as a result of that, we're going broke. And as a result of that, we don't have the revenue to pay our bills. As a result of that, we're driving towards a cliff. You can call it the fiscal cliff. I call it the permanent fiscal cliff, because it's not simply the numbers, it's the idea that's driving the perverse behavior of all those Republicans who claim, wave their arms about the deficit and keep coming up with more tax incentives, tax cuts, keeping the code at 15% when we leave a lot more. Now, I won't hit the Keynesian plain old conventional Keynesian spending too hard, because everybody knows what that is. We've done some ridiculous things, and the one ridiculous thing that we did was the auto bailout. And I know that this is what Obama is now running for re-election on in Ohio, and he'll take a big lead there, and that may just be the turning point. But the point is, it didn't save one job. It simply relocated and redistributed the jobs from south of the Mason-Dixon line, where they would have gone to Hyundai or Nissan or Toyota or BMW or the other plants that are down there, and they put them in Ohio and Michigan. It didn't cause any more car sales, and it just said that basically GM and Chrysler will make a few more of the cars demanded, and the 6 or 7 other suppliers that we have in our economy will make less. I call it a food fight over the wage bill. And if you actually look at it, and I won't give you all the math, it's in my book, but the wage bill in the auto supply base in the United States is $15 billion a year. And as a result of that, about $2 or $3 billion was put in the North as a result of the bailout, and $2 or $3 billion of that wage bill was taken from the South, and nothing else was accomplished except another corruption of the political system. All right, so if we have the 3 domains of crony capitalism, monetarism, tax cut crony capitalism, and plain old traditional Keynesianism, what can you do to fundamentally change and get out of this syndrome, this almost doomsday machine that we're locked in? And I have 3 ideas. They're pretty radical, but they go to the heart of what's wrong here. And so let me just tick them off, and then I'm sure it'll provoke some debate. Number 1, I want to say this very carefully, abolish incumbency. In other words, our political system comes out of a 1787 Constitution that is no longer relevant to the world we live in, and that if we basically said you get 1 term, 6 or 8 years in the House, the Senate, or President, you choose, and you can't run for re-election, that you're going to serve your country 1 time, I think it would fundamentally change the nature of the political and governing process in Washington, because as a pure physical matter, they wouldn't spend day and night trying to raise money, and as a real philosophical matter, they wouldn't spend all of their terms selling out to every interest group that comes along that may affect their re-election through votes or money. And so therefore, abolish incumbency, and you have gone a long way towards dealing with the fundamental asymmetry in the system that leads to crony capitalism. And while you're at it, have an election every year, only for 4 weeks, and 1/6 or 1/8 of the Congress is elected each year, so the public gets a chance to weigh in with a fresh judgment about what's going on. And no one is ever running for re-election. No one is raising a dime. While you're at it, basically overturn Citizens United, abolish PACs, all private money other than small contributions from the political process, and pay for those 4-week only elections every year to elect 1/8 of the Congress with public money. And I think if you do that, you will fundamentally obliterate and change the enormous campaigning machinery that's multi-billion dollars that turns our governing process into talking points. Number two, abolish the FOMC, the Federal Open Market Committee. That's a long topic, but what it basically says is we don't need the Fed constantly intervening in the market, manipulating interest rates, trying to macro-manage and micromanage the economy. Simply do something that they had when the Fed was created in 1914. I call it remobilize the discount rate. The Fed is there. Let the free market set the interest rate. If a bank is really in trouble, they come to the window, they borrow at 15%, let's say, 13% market rate plus a 2% penalty. And if they're illiquid, then they get resolved and closed. And if that can tide them over, so be it. But nobody is running the economy from the Fed and the Eccles building, and Wall Street is on its own. Interest rates and real prices get back into the financial markets. The speculation stops, and we fundamentally air out and fumigate the system. Third, adopt a balanced budget amendment to the Constitution. Now, I used to be a budget guy, and I was far too sophisticated to believe in something as crude as the balanced budget. But I want to tell you, when you look at the system today, where every spending program is a jobs program or an economic stimulus, and every provision of the tax code is a job program or economic stimulus, the system is incapable of making choices, trade-offs, incapable of looking at revenue and expenditure as the accounts of the public finances of the United States and view them only as an economic stimulus instrument or part of the machinery. So, yes, if you had a balanced budget amendment, it may be inconvenient, and it may mean that the economy can't be, stoked up and stimulated and artificially propped up. But the alternative is bankruptcy. There is no doubt about it. The reason they can't agree on anything is not because we don't have camaraderie after 5 o'clock. I actually disagree with George Shultz on that. It was just as bad in the early 80s. The only difference in the early 80s was until Reagan came along and we really screwed it up. People were afraid to death of deficits and of national debt. And now we've gone 30 years. It doesn't seem to do any harm. So therefore, let the other guy deal with the problem. We're only going to put the genie back in the bottle if we have a balanced budget. 3 ideas: abolish incumbency, abolish the Federal Open Market Committee and its activist intervention in the economy, adopt a constitutional amendment that requires a balanced budget. Those 3 things would fundamentally reorganize the environment that we're in, would allow both free markets to reemerge and democracy to have a chance. Thank you.
Receiving line for
Terrific, terrific, thank you.
Well, good evening. I'm Nick Sorrentino. I'm the Director of Political Outreach for the Future 500. And I am honored to have the panel before us tonight to discuss the topic of crony capitalism. Let me briefly introduce everybody. I was saying in the back room that everybody on this panel has done so much that if I listed everything, we'd never get to anything. So I'm going to kind of give the brief version. Luigi Zingales is a professor at the University of Chicago, Booth School of Business, and he recently wrote the book A Capitalism for the People. He's written in the Wall Street Journal, many other places, and I read him on a regular basis. I read everybody here on a regular basis when they write. Peter Schweizer, he's the president of the Government Accountability Institute. He's also a Hoover Fellow. Susan Ox, she She writes for The American Banker, and she is a senior fellow at the Aspen Institute, and she was a big part of TARP. So if you have any beefs about TARP, talk to her. Ed Haldeman, former CEO of Freddie Mac. He has some serious insight for us on housing. I'm looking forward to talking with you about that. And Ms. Berger, Anna Berger, formerly with the SEIU. She was let's just say she broke through a few glass ceilings in her day, which is commendable. So anyway, with that, let's start talking. All right, so the first question I have, I think we'll go to Ms. Berger. To what degree should the government be involved in business?
Well, first of all, I actually believe in government, and I believe that what we need government for is to do things together that we can't do alone. It's to make sure that the rules are fair and that we have a society that can work for all of us.
Anyone else?
I agree with that totally. I think an important word in there was limited and doing things that we can't do for ourselves. I think that was the intent all along. I would argue that we've gone substantially past limited and certainly past where government is doing a lot of things that we ought to be doing on our own.
I will add the fact that you have to be careful about what the government does worse than individually. In the sense, sometimes I do agree that there are things that the government does better, but I also agree that there are a lot of things the government does worse. And so whether you want the government to intervene is a balance between costs and benefits.
I think the other thing I would say is that when government is involved in the private sector, and there are certainly legitimate reasons to do that, we have to be very cautious and be concerned about issues like regulatory capture. I think one of the big myths in Washington is that big government and big business are rivals and they're enemies that are sort of locked into this battle. I think actually a lot of the regulatory things, I would argue like Dodd-Frank, you actually have a big financial players that by and large agree with that legislation. It's the smaller competitors that are at a big disadvantage. So I just think we need to be very careful when the government is involved in the marketplace in legitimate ways to really try to dig down what is going on, who's really pushing that, and who's going to benefit from those government policies.
Susan?
Well, and one of the challenges I think we have is that often you only get the political will to regulate something when there's been a crisis, like the 2008 financial crisis. And then regulators in that frame of mind have no incentive to underregulate. They only have incentive to overregulate. And I'm not saying that I think Dodd-Frank was overregulation. There are a lot of parts of it that I think are very good and will be helpful. But the challenge is if we can create the political will to have good, moderate, thoughtful regulation all the time, it would take away that incentive, but that's a really hard thing to accomplish.
So generally speaking, do you guys think our society, America today, is overregulated or underregulated?
I would say it's badly regulated.
Okay, that's an interesting answer.
I think that, take Dodd-Frank, I think that Susan is right that there are some aspects that are valuable, but I think that most of it is, first of all, very hard to understand. It's 2,400 pages. And mandates to 67 studies and further regulation. So basically, no human being except a full-paid lobbyist will read what is in it. I think that we should have regulation that is so simple that even congressmen can understand it. And it's not a joke, because Nancy Pelosi, when she passed the Obamacare, she said, we need to pass it to know what's in it. So I think that having this limit is not just for congressmen, but it's for individual people. I think the only balance we have is sort of people's control over what is done in Congress, and this control is only possible when things are extremely simple, at the cost of being inefficient. I think that the separation between commercial investment banking, Glass-Steagall, is inefficient. However, it's not too bad, especially if you compare to the Volcker rule. The Volcker, I have deepest respect for Paul Volcker, but the Volcker rule is not implementable, and it's an example of what he was saying before. Is basically the Obama administration wanted to please the crowd with some regulation. The industry did not want any regulation to take place, so you have the perfect combination, something that looks good, has a good name, and is completely unimplementable and keeps employed an army of lobbyists and lawyers in Washington to try to figure out what's going on.
So doesn't that go directly to crony capitalism? We had a financial industry that was against Dodd-Frank and did everything that they could to defeat it. And when they couldn't defeat it, they loaded it up with a lot of extra regulation and language to confuse it so that they could get around it. And so it's exactly how big corporations of the financial industry uses their power and their clout to make something work for them and not for anybody else.
Absolutely. I think but that is a big limit on government intervention. If we recognize the fact that regulators are mostly capture, this puts a big limit on what government can do. And this is not a conclusion. Some people push it to the conclusion you should have no government or zero regulation. I think that's the wrong conclusion, but it does put a limit on what is the reasonable regulation you can implement.
But part of the problem is that there's so much big money in politics that the lobbyists from the financial industry are running all over the Capitol trying to own people. And so maybe what we need to do is figure out how to get money out of politics so that we can actually have a government that's making decisions that's good for all of us, not just good for those who have the most money, who can manipulate the system in the greatest way for them.
But even if you take all the money out of politics completely, you still need to have a conversation between regulators, government, and the business community, because otherwise you can have so many really bad unintended consequences of policy that if you're not getting kind of that granular perspective of what's happening on the ground, you can really create incredibly distortive effects in the market, as you guys would well know. So you have to find the right balance between getting enough voices into the pool so that you're really getting all the perspectives and then making good decisions that are clear and regulatory. That makes sense.
So to that point, you know, often we hear about the revolving door between business and government. I have some people make the case that revolving door has some benefits for society. Susan, I'd like you to speak to that.
I agree. I think, you know, one of the worst things we can do is just tar everybody with the same brush and just say everything's bad. Anybody from government going into industry is bad or vice versa. I think, you know, people are individuals. Some of the, you know, my old boss at the SEC, Arthur Levitt, came from industry, was a creature of industry for several decades, came to the SEC and made investor protection one of his biggest priorities, much to the consternation of the securities industry. And he also went after the accounting firms. You know, I mean, he was a pretty strong regulator. I think in hindsight, he would say he wishes he were even stronger. And had done things even more aggressively. But so I don't think that you can say it's blanket bad. And again, you need some of that expertise. If you had, you know, you can't create solutions in a vacuum. And if you have nothing but kind of regulators holed up in the Treasury Department trying to decide things who've never actually been in a bank or, you know, worked at a securities firm, I think it can be worse.
But Susan, the example you picked was someone moving from industry into government. I have a hard time coming up with any difficulty with that. In fact, I think there's a lot of advantages.
A lot of people do criticize that.
I can come up with some examples.
I'm much more troubled the other way. And we in the mortgage industry, we just had an awful example when people left government and joined Fannie or Freddie and were able to impact legislation, were able to impact regulatory authority. It's pretty ugly when it goes that way. Do you differentiate between the two directions?
I can see there are more challenges that way, but I do also think you can have somebody who comes in from industry and you can say, oh, they're just trying to deregulate everything and just try to cater to their old buddies on Wall Street, which is frankly what a lot of people have accused Hank Paulson of. I do not. I don't put claims to that, but a lot of people said, oh, he only bailed out Wall Street because he was one of them. And I don't think that's all the reason why he did.
Why? Why then?
Why?
Yes.
Because I think that he truly believed that the entire financial system was on the precipice of disaster. And that
Susan, I believe that too, but there wasn't just an alternative between Armageddon and bailing out everybody. There was a middle ground that he never wanted to consider. Why never wanted to consider? Maybe is simply sort of a cultural bias. I'm not saying he's an evil person and he's just trying to enrich his friends. Simply, he talks too much to his friends and believes that the war is ending. And that war was ending, absolutely. And so he came to the rescue.
And he only rescued some. He only rescued Wall Street and not Main Street. And so it just basically it is true.
That's not true. 700 banks got TARP money.
But in terms of people in their mortgages, people on Main Street, individual people, were not part of that bailout at all. And so it was focused totally on one part of the economy and not on the 99%. But I would also just say that in the revolving door, there's a lot of revolving door that has a direct impact. People come from industry. CEOs of mine companies go into the Mine Safety and Health Authority and deregulate mining, and people die. Food, ag folks go into agriculture and make decisions that's good for big ag and not good for others, and it is bad for the consumer and it's bad for our economy. So that the revolving door from industry into government, if they're going in to be able to deregulate or do their own thing and further their own causes, is hugely damaging to our economy and to our consumers. So I would say that the revolving door is a dangerous thing, and how do we figure out how to regulate it or monitor it or put transparency on it so that we can see what's really going on?
But you would never shut it down.
No, not at all. But we do have to have transparency. Right. We do have to have some kind of standards. Mm-hmm. We do have to have some kind of expertise that's really dealing with some of these things.
Yeah, but do you think that transparency is enough? In a sense, it's very transparent that Robert Rubin stepped down from the Treasury and went to Citigroup, that helped sort of create when he was at the Treasury, because he allowed sort of deregulation. And he paid no consequence of that. Now, I'm not saying legal consequence, everything he did was legal, but from a social point of view, I think that what he did was not good. But he's sitting on the board of trustees of Harvard Corporation. He's considered like a great man, and nobody sort of criticizes him. So even if there is transparency, I think what you have to create is also awareness, because most people are happy with it. They don't complain.
All right, well, let's talk about when laws are broken, because we are 4 years into the financial crisis. It looks like it's going to continue on for a good while here. We're settling into the new normal, as Mr. Al-Arian has referred to it. And yet, aside from Mr. Madoff, no one's gone to jail. Why do you think that is, Peter?
Well, first of all, I'm not an attorney, so I don't want to pretend that I'm a legal expert. But I have some views and theories on that. I do think that if you look at the financial crisis, you certainly had people that were making risky decisions and risky choices, and that's just a consequence of what they do. I also think, though, that there's evidence that there was, in some instances, criminal fraud that took place, meaning that people were clearly misrepresenting investments. They were purporting them to be something that they were not. There were certainly financial institutions that were, for example, selling mortgages to Freddie Mac and other government entities that claimed that they were much more secure than they were. And I think in those cases, again, I'm not an attorney, but you should look at criminal charges. The question is, why have none been brought? One of the theories is that the system couldn't take it, and that it would destroy confidence in the financial system if people started going to jail. I actually think it's the opposite. I think confidence would be restored because people had this sense. I think it is largely a cultural problem. Part of that is, if you look at the current Justice Department and you look at the top 4 or 5 justice officials, none of them are recent prosecutors. They're all white-collar criminal defense attorneys. They all come from firms that represent large financial actors, whether it's large banks or large investment houses. So I think the question becomes, on an individual basis, do these government officials, in terms of their future career development, have a disincentive to throw people in jail that perhaps were clients before or maybe clients in the future? I think it's an enormous problem. I think, honestly, that until you get an absolute accounting in terms of individual responsibility, there is going to be mistrust of the financial system. And by the way, I don't get the idea that we had regulatory failure in 2008. There were plenty of laws and regulations that were violated. So the solution is to create a bigger regulatory environment. I think the problem is with enforcing laws and regulations, not with creating new ones.
Anyone else?
I say send them to jail.
What's that?
I say send them to jail.
Send them to jail. Okay.
Yeah, but I think the real issue is why it hasn't happened. It seems to me that attorney generals have a huge political incentive to enforce and put people in jail. We sometimes, on our side, are critical of AGs for doing it for headline purposes. So we got 50 of them out there, presumably seeking headlines. I've worked with the SEC, and we have really capable, smart people on the enforcement side down there that I have tremendous respect for, who are working incredibly hard. I think part of it is really a tough standard of proof, particularly to get the senior people who were fairly much removed from the day-to-day decision-making, perhaps.
I think those are all legitimate points, and again, I don't have a legal background, but what is striking to me is that there's a financial crimes task force that the Department of Justice has that's coordinating these things. You can actually go to the website and see who this task force is going after, and literally they have people that are rigging homeowner association condo elections in Las Vegas that are facing 6 years in jail. You have people that were, inflating their appraisals of a couple of pieces of residential real estate that are facing jail. It just seems to me that there is this huge disparity, and that I would argue that there are people in Wall Street that are too big to jail to go along with too big to fail.
What I don't understand is with Sarbanes-Oxley, I mean, weren't CEOs supposed to be held accountable? Correct me if I'm wrong, please, CEOs and other people?
No, we sign off on every quarterly statement, absolutely certain, and as does the CFO. And I have to say, as somebody who has sat through that many quarters, people take it very seriously and do worry about the ramifications of that signature on the 10Q and the 10K. It's taken very seriously.
Luigi, I'd like to ask you on that. To what degree have recent regulations, Sarbanes-Oxley, Dodd-Frank, chased business out of the United States?
I think there is a huge debate about this. There is no question that, for example, in the IPO business, we have seen a dramatic reduction of foreign IPOs and even domestic IPOs since the beginning of the new millennium. And a lot of people attribute it to the Sarbanes-Oxley. I think that it might be the straw that broke the camel, but the reality is that I think the rest of the world has become much more competitive vis-a-vis the United States. And so what was the very attractive market, you could afford to have heavy regulation here because everybody wanted to come here anyway. Now people are much more reluctant. And the problem is even within the United States, if you think about the private equity market and the public market, there's a huge segmentation because the public market, if you want, is overly protected, but the private market is overly opaque and non-protected, and the gap is huge. So one of the big risks moving forward is that you have a market for rich people where anything is allowed, and then the market for the rest of us that maybe is overly regulated, but not enough that you cannot dump the Facebook stock, but enough that is very costly to trade. I think the combination doesn't seem to be right.
But there's also, to follow up on that point, there's the challenge of how do you deregulate something in an appropriate way to help foster growth and innovation, but not take away some of the consumer protections that we have in the Jobs Act that was just passed, which is sort of a misnomer in its term, but it allowed smaller companies to raise capital more easily in the private sector or doing crowdsourced kind of funding and not have to register with the SEC and file all the documents. But a lot of people on the consumer protection side went nuts because they said you're completely gutting all these things we've put in place to protect people from, fraudulent stock purchases or bad financial statements and all those other things. So it's really, you have to be careful to find the right balance if you want to help kind of promote growth, but you don't want to strip away some of the good things that we put in place.
No, absolutely. But what I'm saying is that today there is too much of a gap between the private equity market and the public market. And the way you do it is you sort of decrease one and you increase the other. You want a bit more regulation in the private equity market and at least a little bit less in the public so that the gap becomes narrower.
All right. Well, there are two more things that I want to discuss, and Peter has a TV engagement, so we'll have to let him go. Thank you very much, Peter. What I would be interested to know, each one of you, you pay attention to this sort of thing. When Mr. Bernanke came out and introduced QE to infinity, what was your reaction?
I I think that I divide things between the first and the rest. I think at the beginning was not crazy to increase money supply. I think that there was, number one, a panic, so the demand for money increased. There was a reduction in lending that slowed down the multiplier. So I think that increasing the supply of money in that moment was reasonable, and in fact had quite a big effect. Moving forward, my concern is that it does not have a lot of effect on the GDP and growth, etc., but it anesthetizes the budget problem so that the politicians don't see that there is a big wall at the end of a tunnel and they are like running against that wall.
So when do we hit that wall?
I think that we'll see. I think that the big sort of alarm will be when Japan gets into trouble. I think that among my faculty there is this joke, you know what's the difference between Japan and Greece? 3 years.
Oh my.
So go ahead.
Yes,
You
no,
go ahead. I felt it was a big mistake, and I thought it was a result of where we are in the election cycle, and that it was going to result in asset bubbles. And like Luigi, I thought that what the Fed and the Treasury did in 2008 was sensible. Looking back, people can say it was too much and we should have thought about a middle ground. I think maybe even Luigi said that. But that's with the benefit of 20/20 hindsight. When you're going through it at the time, you don't know where the cliff is, you don't know how bad it is, and the worst thing that can happen is you take that 5% chance and it goes over. So I think they handled it masterfully in 2008, but I'm really troubled by continuation with QE3.
Interesting response.
Can I ask a question to add? Because you said correctly, I think at the time you don't know how much is the right amount. So one question that also Anne had, why sort of the government and Freddie in particular did not do much for homeowners? And it says, according to studies even today, one of the big causes of the continuing recession is the debt overhang of households. And the single way to address that was some form of renegotiation of those mortgages, and there was no serious attempt to do that. Why?
Oh, I don't agree with your thesis. I think there was an incredibly serious effort to do it, and do it in a very sensible, thoughtful way. The government...
Which was, sorry?
HAMP, HARP, and more than 1 million modifications were done under that program. A tremendous refinancing program under HARP. And I think we were very, very active, appropriately active, and if we had gone much more in terms of principal reduction, I think that would have been a mistake and would have been too much intervention by the government.
I thought that they were good programs to start, but they didn't go far enough, that we should have negotiated down the principal and we should have refinanced the interest rates, and we did not do it enough.
The thing that strikes me as I look at housing is a lot of the banks that are foreclosing on people manage their books far worse than the people they're foreclosing on. And I think for a lot of Americans, that's a real fundamental thing that gets at them every time they pay their mortgage. How much do you think that's a factor in the American public today?
I think it's a huge factor. That's the reason why in 2008, this is not the benefit of the hindsight. In 2008, I had a plan that suggested you should treat the banks and the individuals in the same way, so through a form of debt for equity swap. And that would have been sort of fair across the board. This was completely ignored, and I disagree with what Ed is saying, because I think the help you gave, gigantic help to people like me who refinance and at a very low rate, but if you were really underwater, which are the people you really want to help, those people got nothing. In fact, they saw the other guys refinancing at a fantastic rate, and they got stuck. So I'm not so sure that the reallocation was given to the right people, the people most in need.
So you think there should have been an active principal reduction program?
Absolutely. There was de facto a principal reduction program for banks. I don't know why you didn't have for this, especially for people that did not sort of take too much risk. They simply bought the house at the wrong time.
Yeah, so Luigi, how are you going to pick out those people who just were well-intentioned people who bought the house at the wrong time versus those people that bought 4 houses, or those people who bought too much house and people who put nothing down? How about those people who did the home equity loans? How are we going to differentiate between the good people and the bad people?
If your house prices in your zip code drop 30%, it's not your fault. Is sort of an extreme market movement, like was an extreme market movement for toxic assets, and people intervened to try to rescue the banks. So why to save the banks and not the individuals in that situation? And today we have very regional and even zip code level indices that allow us to just go in the areas that have been hit the most and not across the board.
But many of those people, even in those depressed zip codes, were people who took their equity out of the home and took it down to zero so that they could do a vacation.
Yeah, but a lot of the managers of the banks...
Generally speaking, that's not why people were refinancing their homes. They were refinancing their homes, and you can look at the data, because they had a medical emergency, they didn't have health insurance, because...
In many cases.
Many cases, because their kids they were trying to put their kids through college, because they had lost their job and they were trying to figure out how to keep their families going. It wasn't that they were refinancing and taking it down to zero.
No, but the cash-out refinancings was actually a much bigger portion than...
But in terms of the people that we needed to figure out a solution for, to figure out how to draw down their principal and refinance their debt, they were all left out in the cold.
All right.
I think my point is it was very hard to differentiate those cases, is my point.
Okay. Obviously, a point of contention and, frankly, illuminating on all points. One last question for you guys, and I'm going to start with you. Your background is in labor. That's what I understand.
It is.
I'm going to give it to you first. Were the bailouts, the bank bailouts and the auto bailouts, worth it if it fundamentally undermined the American economy? And you don't have to accept my premise.
Well, I don't accept the premise. But first of all, I just think that we're missing a whole, if we're talking about crony capitalism, we're missing a whole other section of crony capitalism, which I just don't want to get away from. I mean, because the reality is big money is buying our government.
For sure.
And is building the greatest inequality in our history since the Great Depression. And somehow we have to address that. So I just want to give a couple of examples coming out of the labor experience, because I spent, I grew up, I'll age myself, I was born in 1950. 1 in 3 workers in the private sector were in a union then. And from 1947 to 1979, we had the greatest prosperity that this country has ever seen. The bottom 20 and the top 20% of people all grew. We had high unionization, high regulation, and profitable economy, and the greatest middle class that this world has ever seen. Attacks on the labor movement, attacks on regulation, the deunionization of our country. If you trace prosperity and inequality with the density of the union movement, you'll see that as the union density fell, so did prosperity and so did the middle class. And who was at fault for that? Corporate cronyism. Corporations buying government and trying to deregulate and deunionize the country. And right now we have the Koch brothers as the perfect example. The Koch brothers, who have been using their millions and tens of millions of dollars to try to buy government, to try to buy election, are now dumping money in California to support an initiative that will take workers' money out of politics. So they have free rein to spend all of their money to buy government, and they're going to try to deunionize. First they try to deunionize Wisconsin, and now they're going to try to deunionize California and the rest of the country. And so if we're going to try to grapple with what's really going on, the bailout is one thing, but how do we take out corporate money, big money that's trying to distort our society, and give it all to the top 1/10 of 1% and leave everybody else in the cold? And the reality is, every single day we are getting, our inequality is growing more and more. And so we have to tackle that problem. I actually, some of the points that were made earlier in terms of the big money in politics needs to get addressed. It is how corporate cronyism undermines our society. And so we can talk about the bailout, we can talk about other things, but how do we talk about that one? Because I think that if we could do that, if we could turn back Citizens United, if we could have public finance of elections, if we could put transparency on it, we would be in a much better place.
And I think that is absolutely right on. That is something that needs to be addressed. One of the things that I find interesting, and I think this is an important point too, is that labor contributes a lot of money to politics as well. Is that the same?
Well, first of all, our workers, in my union, people who, we give money to politicians, we give money to politics, that individual people decide to do. It's not coming out of their dues. They check off a thing and say, I want money to go to politics, because they're janitors, they're nursing home workers, they're home care workers, they're workers that have no voice, no money on their own, and they want to be able to have their voices heard. They want to be able to talk about education. They want to be able to have a collective voice about fair pay, fair hours, and all of that kind of stuff. And the only way that they can be heard is if they do it together. We use that money oftentimes by getting workers involved and going to meet with their legislators to talk about what the critical issues are. I think that workers should have a voice in our society. That's why, and they should be able to come together and express their voice collectively. It's different when corporations, which are taking some of the money out of our pocket, use that money against us. And sometimes, in some instances, with the publicly invested firms, our union money, workers' money, which are in pension funds, are going into corporations that are then turning around and using that to buy government against the people. It is not right.
And you know what? What I think is interesting about the issue of crony capitalism is that you can come at it from different places. Labor sees it one way. Perhaps the more free market-oriented people see it another way. But we know there's something deeply wrong. And it's something that we need to address as a society. And with that, I'll say I appreciate you guys taking the time out to participate in this discussion. I think we all learned a lot. I know I did.
Nick, we have time for questions from the audience. Excellent. Oh, there we go.
I don't know, I'm just going to throw this out to the panel, but we've had a Congress since the post-crisis, and they have not dealt with taxes or cutting government, and it's now going into the fourth year. I mean, do you see that as an indication that the system isn't working? I mean, we set up a super committee that was supposed to resolve that in the last session, and nothing happened. They were trying to create a bipartisan approach to it, but nevertheless, we look at China, which just vaulted over Japan as the second world's largest economy. There are 10 years people are saying before they reach us as an economic superpower. We are the world's largest superpower, but do you think the system's broke? It needs to be fixed? I mean, what are your thoughts?
I think we need to be careful to differentiate between cronyism, which I would sort of characterize as favoritism, undue influence, or decisions made because of kind of relationships as opposed to kind of facts or societal good, and ideology. And I think that there are people in Congress today, I specifically mean the Tea Party, but there are others as well, who I don't think that the Tea Party is bought and sold by corporations. In fact, they rally against crony capitalism a lot. But they have an ideology that is dead set in a lot of places against collaboration and working together. And in fact, as we saw last year, they were sort of ready to take us over a cliff in terms of the debt ceiling rather than compromise. And so I think while money is a huge problem, and I think, a lot of what Anna said I agree with as well, but I think we have to also acknowledge that there are strong ideologies at work here too, and that people bring their own bias and their own ideology, and that they are a lot of times unwilling to compromise, and sometimes proudly so. So we should, make that distinction.
Well, so my question to that is, we have a government that has expanded and continues to expand every single year, and cronyism continues to expand every single year.
Actually, the Obama administration is a smaller government, the Bush administration. But
we'll have to agree to disagree on that point. But is there a place for people to say enough? Is that a reasonable stance?
Well, so first of all, I think that we're missing a whole point. So I think that we have a different problem. We have a crumbling infrastructure. We need roads, bridges, electric grid, high-speed rail, clean water. We need to rebuild our infrastructure. China does it, other countries do it, we don't do it. We need a long-term industrial plan. We need to figure out how to invest. And government, from my perspective, is what we do together for the long term. And now I would say that one of the problems with Congress is that they're not thinking about the long term. They're not thinking about investing in our society, which is important for our growing economy. And I think that is the biggest problem. We need to actually create jobs. We need to put people back to work, and we need to do it in a way that is about the long-term good for our society as a whole, which is good for business as well.
But I think the points that you make support the question that it is broken, because we've made no attempt to solve those infrastructure programs. We've made no attempt to solve the deficit problem. We had a year in this country where the estate tax just disappeared because they couldn't come up with an answer on the estate tax. Freddie and Fannie have been in conservatorship for 4 years and 1 month. At my company, we had 6,000 people who were put into conservatorship in September 2008, and they've had no job security for over 4 years because we can't come together to make any kind of resolution of that issue. I totally support your point of view that it is broken down there.
And I think we have another question.
Hi, Bob Nash, Artemis Acquisition Corp., a public reporting company, waiting for our symbol with FINRA. 2 years ago, we started a self-offering because we didn't have the $3 million to hire the Wall Street underwriters to go public. Just as soon as we get enough money to pay all the audits for the CPAs, the Qs, and the Ks, and then the SEC attorney, by the time we get it filed, we're chasing the tail like a dog, because by the time SEC receives it, then they're saying, okay, now we need the next quarter updated. So we just went around it and ended up buying a shell that's already approved, and now we're just going to get our symbol. But my question is, you mentioned job creation. Right now, the Jobs Act, which was signed in February, the new language hasn't even started to be written because we're in an election year, I guess. So, you know, how can small businesses go public if they don't have the money to pay the insiders on Wall Street, get the job creation going? And then there was the comment earlier that someone said, you know, you have to protect the investors from buying bad securities. Well, that's what the audits are for. People have to be held responsible. You know, the Edgar system for communication, computerized communication to the SEC, maybe we need to step it up to where companies have to report every quarter their financials, not a yearly Q or K. And Enron would have been maybe stopped, you know, before it got started. So I guess my question is, where are we going with the Jobs Act? If Romney gets elected, it gets squashed. If Obama gets elected, it goes forward. Do any of you have any comments on that?
All right, I think there are two pieces to that question. If you could address the IPO question.
Yeah, we are in a system in which the auditors don't guarantee the business, they guarantee the integrity of the accounts. So there is an intrinsic risk that every investor has to face. This is, after all, the free market system. However, all these things cost. So maybe what we need to do, and that was what I was saying earlier, we should have some more segmented market. So we should have a tier of market for small companies where the demand for disclosure are lighter, but where you are more careful in who gets in, because we don't want unsophisticated investors to be burned. So I think we need to think about this, but we have to realize that if you want sort of the integrity of the accounts, you have to pay for it. We might want to have more competition and favor more entry in the audited business, but all this stuff costs. There's no way around that.
Jobs Act.
Well, the Jobs Act, the one that's actually titled the Jobs Act, is really not, it's sort of a misnomer. I forgot what the acronym is, but it's not really actually dealing with job creation. It is dealing with going public and that kind of stuff. I mean, in terms of broader job creation overall, I do think, I mean, I know a number of people across the aisle and who are advising Governor Romney, and I think the people who think that financial regulation is going to just disappear if Romney gets elected are kind of in fantasy land. I mean, he's not going to come in and dismantle everything. The CFPB is not going anywhere. He's not going to strip away every single thing in Dodd-Frank and Sarbanes-Oxley and everything else you haven't liked Gramm-Leach-Bliley for the past 20 years. So I think that we're still living under a lot of that, regardless of who gets elected.
We have another question.
Yeah, thank you. I'm Elliot Clark. I'm actually the CEO and publisher of Corporate Responsibility magazine. So I was listening to the panel, and a question occurred to me. First of all, I feel like sometimes when we talk about crony capitalism, it's a little bit like watching an Oliver Stone movie. Okay? All right? There's an awful lot of conspiracy theory taking place. Now, I could turn around and say the SEIU is lobbying the very legislators that their employees work for. And that would be okay. But I don't think you're doing anything wrong. I think that's okay. My question is, when we talk about crony capitalism and we get into the Oliver Stone realm, I know the people behind me are really smart, but I'm not sure they have the formed intent to get together in secret rooms and collaborate to do the bad stuff that gets associated with the term crony capitalism. I agree there's revolving door issues. So my question is, am I being naive in thinking that they're not secretly, and I know you may be thinking about it now that I've suggested it, but secretly collaborating to destroy the economy, to screw the workers, to screw the homeowners, that there really isn't this formed intent? Why am I naive to say that?
I don't think you need...
Let me speak to that one, because I think you are naive. And I'd encourage you to read a book by Gretchen Morgenson called Reckless Endangerment. And it is a playbook on how to do crony capitalism. It involves the two GSEs, Freddie and Fannie, and it talks about a playbook. And what was done there is embarrassing. And it was a revolving... Have you read the book?
Yeah, and you don't need a lot of conspiracy. I think it's simply pursuit of self-interest brought to a different level, which is the political level. I think that the biggest problem is that the conservatives traditionally thought that lobbying was good because it was getting the government off the back. I think lobbyists have learned, and now lobbying is not just getting the government off the back, it's getting the government on your side to do all the things you want the government to do. And that the book is exactly an example of how sort of Fannie and Freddie were capturing the government. They weren't pushed by the Clinton administration to do crazy things. They were capturing the government to do what they wanted.
I think that there's also a strong level of subconscious bias. So it's not this sort of Snidely Whiplash kind of in the back room kind of cooking up nasty deals, but I do think that people can, whether it's because they have social relationships with certain lobbyists or certain members of Congress, and you start to develop relationships. It's the nature of people to develop relationships and start to build trust and respect, and that you sometimes don't realize that that can be influencing a decision that you're making. And so I think that's actually more difficult to police and a more insidious problem, but I do think it's real.
Susan, how about hiring spouses of congressmen? How about opening regional offices in every critical congressional district? How about the size of PACs?
You're saying it's more deliberate than what I'm saying.
I viewed what went on as pretty deliberate.
I'm thinking of people inside government in terms of how you're dealing with, even when you think that you're making a good conscious decision that you might have.
Or having Vice President Cheney meet with the oil industry about environmental standards.
Sure.
Or deregulation. That would be a good example.
And on that note, I think there's plenty more to talk about, and I hope that perhaps you guys will join me again sometime. I totally enjoyed it. Thank you very much for your time.
Thank you.
Thank you. It was great to be with you.